Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Financial Services, and as I speak to all of you all this Monday morning around about 10:30, markets have given a thumbs up to the outcome of the state elections of Maharashtra especially, and the momentum that we saw last week on Friday has been further carried on. Before I go any further, let me give you certain levels on Sensex, Nifty, Bank Nifty, Rupee Dollar and crude oil. Sensex at about 80,360, gains of about 1,245 points. Nifty at 24,310, 400 points gains on the Nifty spot. Bank Nifty 52,200, gains of 1,060 odd points. On the Rupee Dollar equation, 10 paise strength in the rupee, and the level is 84.34 rupees to a dollar. And on Brent and NYMEX, $74.86 to a barrel, and NYMEX is trading at about $70.94 to a barrel. There has been a little bit of downtake in the crude oil prices. Of course, the main reason for the uptick in crude oil prices is the news flows and events unfolding in Russia as well as in the Middle East. Iran is concerned. Elevated levels can be seen depending upon the news flows, like we've been maintaining for the last couple of months. Demand and supply is not going to drive the crude oil prices, but news flow with respect to Russia, Ukraine and Israel and Iran, unfolding of events will determine which way the crude oil prices move. On the Rupee Dollar equation, with the outcome and the likely possibility of a little bit of more strength on the rupee front, one can expect levels of 84.25 to 84.30, and on the weakness, possibly what we've seen, 84.40 and 84.50. But most likely there is expectation of some strength in the rupee for at least this week, keeping in mind how last week we saw the steps taken by the banks to curtail the uptick as far as the crude oil price is concerned, as far as the Rupee Dollar prices are concerned. So expect these kind of levels, not really expecting much movement in the rupee, but within the range of 10 to 15 paise strike is what we expect the movement to be. Like I mentioned, 84.25 to 84.30 on the strength, 84.40 to 84.45 as far as the weakness is concerned. So that's going to be the broad level as far as the Rupee Dollar equation is concerned. On crude oil, like we mentioned, news flow from the overseas market. On the markets, well friends, I think the momentum continued last week on Friday. We've seen the outcome of state election in Maharashtra giving a further push to the markets. The broad range on the lower and the higher side, as we always mentioned, 23,600 to 23,900, and on the higher side 24,300 to 24,500. That's going to be a broad range where you will see the market oscillating, Nifty spot rather. Despite of this rally, friends, we mentioned last week and the week before India VIX, which is at an elevated level. Even today, if you go to see, India VIX is somewhere around 16. So this means that the volatility is likely to be persistent at higher level. We are going to see a lot of volatility during the day, or maybe spillover of 1 or 2 days, unless and until we see a cool off in India VIX at 14 and below 14 closer to 12. Unless that happens, I think the choppiness and volatility will be there, and we have to be prepared for that. Along with that, sell side figures from the FIs have been at a lower level. Vis-a-vis on the buy side, the domestic institutions have maintained their buying spree and given support to the market. But remains to be seen. We are approaching November end. December possibly is the time when vacation period will start, Christmas holiday and New Year holiday will start, and what is going to be the activity from FIs is something that we'll have to watch out for. Can expect a little bit of selling from FIs during now until second week of December, but the figure is going to be at a much lower level than what we've seen in the entire month of October and beginning of November. We can also expect the markets to move up a little bit more if the momentum on the upside continues for today and tomorrow. Then short covering has already come into the market and given an uptick, and I think if we maintain this uptick, not in with the quantum that we've seen, but at least with some decent amount of uptick, then I think further short covering will give markets a boost on the higher side, and then possibly taking off that resistance level of 23,300 to 2400, 24,500 cannot be ruled out. But one needs to see what kind of momentum is there for the next couple of days in the market. RBI policy next month, between 4th and 6th, the MPC meeting will be there, and possibly after that we'll see the policy outcome also. I think markets will be watching out for the commentary from the Honorable RBI Governor, given the kind of post-US presidential election, and of course on the domestic side the state elections, and what is the comfort zone for the RBI post the elevated numbers on the inflation front. So I think it's going to be an interesting week for the next couple of weeks for the market. The sense prevails that, and if you recollect, last week we had mentioned, friends, that 23,300 to 23,000, somewhere around these levels, market may try to find a bottom. We have managed to recover almost 1,000 points on the Nifty and 3,000 odd points on the Sensex from the lows that we saw last week to what we are witnessing this morning, Monday morning. Needless to say that there might be days of profit booking, which may see markets losing the gains that it had opened up with, but whether the buying coming in at lower level is something to watch out for. So this is going to be a challenging time given the events that are lined up, and of course the positioning of the FIs and the domestic institutions. Having said that, we always maintain a positive stance from a long-term point of view, and we give you certain investment ideas. Today we have identified auto ancillary or OEM segment as an opportunity to invest, keeping in mind the launches for this year and the coming year, number of launches that are lined up, and of course the recovery in the global markets. The two names which have come in the spotlight, first one is Amara Raja Energy and Mobility. It's a battery manufacturing company, and as we all know, battery is a core component for any kind of variant of engine, whether it is driven by fossil fuel, petrol and diesel, whether it is driven by CNG, or more importantly electric vehicles and even hybrid vehicles. So the point over here is that this correction has given an opportunity to look at certain fundamentally strong names in the broader universe. Auto ancillary is one particular sector that we expect to do well on fallback of the performance of the auto sector, because they are very closely linked with each other rather. So the first investment idea is Amara Raja Energy and Mobility. The second one is a pure component play, CIE Automotive. Large part of its focus has been in the domestic arena, but it is also one of the largest supplier to the foreign brands of automobiles that are manufactured. Some niche and marquee names are over there, and over there also we expect the domestic business to contribute, and a large contribution coming in from their operations in the overseas market. This is also this is one stock in the broader market which has corrected quite well, and in terms of valuation, long-term investment looks quite attractive, with your downside being protected for both Amara Raja Energy and Mobility as well as CIE Automotive. Mind you, friends, these are long-term investment ideas, so you need to start at current levels. Given the choppiness and volatility in the market, use those lower levels to nibble into these stocks, but start at current levels with a small exposure, and on dips you can continue to grow your exposure from a long-term point of view. Mind you, these are not BTST, STBT, short-term, medium-term, but long-term fundamental ideas. Thank you very much for your patience, joining, and I'll see you next week. Till then, take care. Bye-bye.